once. And I hope you guys are doing all right. Futures up here a little bit this morning, so we'll talk about where the indexes are going. Obviously, we'll jump into crude, bonds. We'll do the dollar, and then we got a couple positions going with our research customers here at Trading Analysis. Tony is not yet in. Those of you who don't know me briefly, this is a open webinar. I am Todd Gordon, and I run tradinganalysis.com. And we partner up with MotiveWave. This is our preferred charting package. Excellent software doing some of that voodoo that we do. Style of technical analysis called Elliott Wave and Fibonacci. That is not for everyone. It's for people who like to put in a little work, like to understand, why these price bars move back and forth, where they're likely to go. And it's a school of thought that we use to kind of get behind the scenes and understand the understand the reasons why price is unfolding the way it is. It kind of gives you a peek behind the scenes as to the psychology that's driving traders and investors. So as we all know, markets move based on where we think the fundamental data will be at some point in the future. Markets aren't trading based on what's happening now. It's based on what they anticipate or they discount to be happening in the future. So the best way to figure out where the price of the underlying market's going is to look at positioning, look at the patterns that's unfolding, because again, that's people anticipating what's going to happen on a fundamental basis in the future. Sometimes they have it right, sometimes they have it wrong. Okay, markets don't make that mistake. Think that markets trade based on the fundamentals that are happening today. No, that was being traded on months ago. So what's happening here with all that being said. And I do see Tony is in. Tony, what's going on here this morning? All is well in MotiveWave land?
Yep, all is well. All is well. I think we launched 4/2/15, I think, last week. And we're going to be putting out a 4/2/16 probably this week. The main reason for that update is we're actually launching a new edition of MotiveWave.
Oh, are we up to the new edition?
Well, not new version, new edition. So it's going to be we're launching a Charts Plus edition.
Oh, got it. Okay.
Yeah. So as the name infers, it's the Charts edition plus a few additional features. We just got a lot of feedback. People, the entry-level edition for $99 is great, but we're finding that a lot of entry-level traders are wanting a couple more features, one being replay mode. Because if you're learning how to trade and you want to just get in at a low price point, you want to use the replay mode to go back and practice your analysis and stuff. So we added replay mode into there. We also added in full support for templates. And a few other things were added into there as well. We're going to be launching, it's going to be a price at $195, so in between charts and trade.
Okay, got it. Yep.
Yeah, and of course you can go and add modules to that, if there's a couple more things that you wanted to, to go ahead and add to it. Yeah,
so there was a big gap between the charts edition and the trade edition then.
Well, yeah, it kind of fills a gap in between there, so.
Very cool. Very cool. That's good. And that's a one-time purchase for, would you say, $195?
Yeah, $195. Yeah.
And okay, good. And then you have the option to add on these modules below. Elliot, obviously, that's what we use a lot. Auto, Elliot, Gartley. That's great.
Yeah, you can have those on there as well. But if there are people out there who, quite often we look at MotiveWave and its Elliott Wave features, but it's really a great platform in its own right.
Yes.
Yeah. So there's actually a lot of people who actually use MotiveWave without using the Elliott Wave capabilities, and the charts is just
why would they do such a thing, Tony?
Well, as you know, Elliott Wave takes there's a lot of skill in doing Elliott Wave counts.
It's like putting a V6 in a Porsche. What's the point?
Yeah, basically, yeah.
Hey, I'm biased. I'm a big Elliott Wave guy, so I'm just joking. But no, I'm just kidding. All right, well, that's great. That's good. So business as usual. Things are working well over here, and volatility's up. So that's good for all the traders, and so we'll be looking out for, would you say, 2 point or That is the new version, 4.2.15. Okay, and then you said there's another version coming out soon?
Yeah. We're kind of running out of numbers here for 4.2. It'll be 4.2.16.
Okay. All right.
And yeah, we're also working, very hard on version 5. So that's we kind of got a bit of a split focus right now. Is trying to make sure that anything in version 4 is fixed that people are reporting, and also making sure that there's any high priority features or little changes that we want to make are still being released without having to wait all the way to version 5.
Right. All right, that's cool. And then in version 5, you're definitely going to have the indicator that tells you where to buy and sell, and it works like 80% of the time.
I don't think we're ever going to have an indicator that tells you when to buy and sell. That's just not what we're about.
Well, if anybody could figure it out, you could.
True.
All right. We'll get serious here. So as always, Tony, we hang around a little bit and just put me back on track if there's something I'm not doing quite the right way on MotiveWave.
Sure. Yeah, I can do that.
Awesome. Thanks. Say hi to Lee for me, and hope the kids are well. And that was Tony Lindsay, founder of MotiveWave, and obviously we work well together. They great charting package, and there's multiple editions available. You can kind of customize the platform in a way that works for your trading style. Obviously, I'm a big Elliott Wave and Fib guy, and this platform is amazing for it. So if you spend the time to learn, the methodology, if it's not quite for you and it's not for everyone, that's fine. Leave the heavy lifting to guys like me, and I'll kind of handicap it for you on the platform. And if you're in a kind of different way of approaching the market, MotiveWave can accomplish that for you. So that is MotiveWave. That's me. Enough. Let's dive in. Questions. Let me just pop those questions out. All right. So sorry about last week. We had an issue with just resetting the webinar calendar for the year. So obviously we've reset it, and you guys have found your way back in. So that's good. We will be strong going forward. I probably will not do a webinar next week. I will be traveling next Wednesday. I'm actually going out to Denver. I've got to do some business Monday, Tuesday, and I am going to break away one day and go skiing Wednesday. So I will let you guys know if I'm near a reliable internet connection Wednesday morning. I will do it, but I will be in contact via email if we're going to do that one or not. Okay, just a heads up. So all right, to biz. S&P, as much as I think the market is being pulled down by crude and China, this is a time where, again, you don't trade, as I opened with, you don't trade based on what's happening right now. It's, what people are thinking about in the future, and whatever it may be, whether the Fed stops hiking rates, whether other central banks around the world are going to continue to support the market. So far, it doesn't look like the market's in for a breakdown. I love it if it would, because we love trading volatility. Just markets going to a new high, that's just kind of boring trading right there. It's easy just to buy and hold, and you don't make a ton because volatilities are so low, but that's fine. We can make money in up markets. I'd much rather trade down markets. So let's just kind of put this in context before we jump into the Elliott Wave stuff. Let's do an ATR over there, which I should have, right at the bottom. Throw a 14-period ATR, and I like this indicator. It's kind of a volatility indicator, and it tells you basically the average of the high to low in a bar over a certain period of bars. This is 14 bars, so high to low on average. Right now, the S&P is trading about 62 handles a week, 62 points a week. We did get up as far as 74 points, and I'm looking over at this right scale. That was at the, interestingly, that was at the rally back. That's interesting. So we got a pretty sharp move back, and that was obviously a high volatility range because we were still starting to see some ATR increasing. But obviously the big drop here was a lot of range. The rally back was a lot of range. That's good. Compared to the slow drip higher that we saw in 2013 and 14, you had volatilities around the 30s in a given week. So now we're seeing double the travel range. We're seeing 60 points a week on average in the S&P compared to 30s to 40s. So that's good. So volatility we like. And I think we're going to continue to see volatility because within the Elliott Wave pattern, I do think we're in a fourth wave here. And this test of support was key. This 1920 down towards 1890, that was key. If we hold, and it's possible we do, we have established long positions over the last couple of days against this fib support zone. This could be the C wave of a triangle, rally up in D, one more sell off in E, and then it's possible that the correction is over and we do go to new highs. So there's a lot depending on this 1900 to 1920 area holding in the S&P. If we break, then the triangle count is invalid and we are likely to head lower. The minimum that we should do on the downside, and let me just get rid of Elliot and let's just do fib. If we break the 1900 area, we should get at least equality. It's a measured move down. It won't be that deep because this was such a deep move up. This was such a deep correction. So, the level I'm focused on, let me get rid of everything but 618. That doesn't work. Remove. I'll get rid of everything but these guys right here. So the measured move is basically distance traveled in the drop. Okay, and that same distance is this right here from 0 to 100%. So as this correction gets higher and higher, notice how that 100% level is coming up. So if we break through 1900, immediately we're going to be looking for 1851, and then we also have an intermediate target. And ultimately, if this is a top, we should get down to 1700, which is your 1.618 projection of that move compared to this move. Okay, I hope that makes sense. So this is a key support area right here. That is the wave count. And if we do get a rally, we expect the D wave to have a Fibonacci relationship to the alternate wave, which means B. So B wave will have an impact on how far D wave lasts. So it's like alternate waves have an impact. A wave is going to have an impact on how far C wave goes, and that's that 786 C versus A. Then we're going to go up, look for D at the 618, because usually there's 618. This was a deep test. We could get up to 786, which will be a bit higher, which would be right around there. So D wave should end somewhere in here. Then we get E wave, and E wave will have a Fibonacci relationship to C wave. So, that's a cool thing about Elliott is it gives you context of, how far each wave within this consolidating triangle would last. Traditionally, you look at traditional technical analysis books, and you're like, all right, the triangle, who knows how long it lasts? It goes up, it goes down, it goes up, it goes down. With this model, you have an idea of when it's going to end and when you can get on board the breakout. Okay, without it, that's just a traditional triangle pattern that you've read in every technical analysis book out there. Okay, so that's what we're playing for in the S&P. To the NASDAQ. NASDAQ's got a more shallow triangle count going on here. It is a stronger market, so no surprise there. Here is the triangle we're looking at. I have it on the daily, so I'll make it a little simpler. Really good support down here at 4150 to 4130 in the NASDAQ. We are up here this morning. Futures are up pretty good, so we might not get a test, but I would love to see 4150, 4140 to buy because you got a pair of 618 fib levels there. And again, that's the C wave before D and before E, and triangle should be complete. So again, I'd love for the market to break down, but again, you got to trade what you see, not what you think and not what you want. And the market obviously is not going to just go to where we all hope it goes. We've got to trade the market for what we see in front of us. And that's a hard thing. You got to turn off your brain a little bit and kind of be like a trend following idiot a little bit to be a good trader. Lose the opinion, right? So that's the NASDAQ. Let's do the Russell. The Russell's been super weak. And the bounce has been pretty pathetic. We're in between two fib support zones here. We've got a fib support zone there that didn't really hold around 1060 to 1080. Then we have another deeper, looser one right around the 1,000 level in rut. This is like that 4,500 level in the NDX I just showed you. If we get anything down here, I'm not going to buy the Russell, but I'm certainly going to look for the Russell to stop putting pressure on the NASDAQ and the S&P. That's a really good support zone there. So again, using it as a confirming indicator to be long a stronger market like the NASDAQ. Eric, we get started at 8:45 every day, every Wednesday, 8:45 New York time. So we just covered the top indexes. Bonds, we're still talking about this triangle situation, and bonds are just in this monster triangle. It's possible we've ended the E wave triangle or the B wave triangle in the bond market. Bonds have been contained since early 2015. We're starting to break higher, but I have my doubts whether the triangle is in fact over. We could be doing, this could be the D wave here, and we're going to have an E wave drop. So bonds are still in consolidation until otherwise notified. So when the bond market breaks, it's going to be spectacular. Okay, Eric, apologize about that. We had to set up a new webinar. I'll have the guys change that. So I apologize. Yeah. All right. Sorry, guys. It did say 9. Yeah. Apologize. Oh. You guys didn't miss much. Where Tony took us through. Sorry, it is much. That's the important part. Sorry, Tony. Tony from MotiveWave took us through the new edition or what's coming up on MotiveWave, and we kind of get the formalities in early on. So yeah, I'll change that, guys. So okay, those are the major indexes. We did bonds. Let's do crude. Where's crude? QM. All right, so we're up 78 cents here this morning. I've adjusted the wave count in crude, and here's where I think we're at. I'll show you the positions I'm in, Justin. Yep. So here's where I think we are in crude oil. I think wave 4 completed. It's a goofy wave 4, and I don't love this. I don't love this count. I have it as a. In fact, I hate this wave count, but that's all right. We can work with this down. This whole thing is pretty crazy, actually. I don't really know what this is. But for now, and I don't have a high degree of conviction, I'm not really trading this. I do have a butterfly going on in USO. So I've got a 9, 10, 11 put butterfly going on. And, I want it to kind of hang in this zone. I think we're starting to move into a fourth wave. So we should do 3, 4, and then down. So I've got one that takes us through February. It's a 9, 10, 11 butterfly. So I'll just overlay USO, which is the crude oil ETF. And, this is a trade we like to put on coming into a fourth wave. So USO is on the left scale. Crude underlying is on the right scale. So we are, the body of the butterfly is at the 10 strikes. Let me just show you that trade. Members, trade desk. Okay, so these are all our open positions. USO. So we have a put butterfly in the Feb 1 weeklies. We sold 2 of the 10 puts, bought 1 of the 11 puts, and bought 1 of the 9 puts for debit at 27 cents. So, the body of the butterfly is $10 over here. Which is equivalent to about $32.35 in the underlying crude. So, as long as we kind of hang in this zone, we should be able to collect the theta, and the body of the butterfly, those options will begin to decay as we start to move down. So let's just take a look at that position. In USO, that's CSX. We have an earnings trade going on in CSX. The conference call is going on right now. So here's the trade we have on. We have the 9, 10, 11 put butterfly, short 20 of the 10 puts, long 10 of the 9 puts, and long 10 of the 11 puts. Altogether, we should have a positive delta of 101. We have small time decay, only 0.8 right now. It's such a cheap product right now. This won't wind up being a very big P&L trade just because, you know, I'm doing 10, 20, 10, but I should have like 50 on because it's such a cheap product now. But that's fine. Kind of an entertainment trade, just kind of heading into this fourth wave. So I think that's what Crude's doing. Eventually, I do think we'll get down into the mid 20s. There's a big old zone of fib support there in crude oil. So that I think would be a pretty significant low into the 25 area. So Arthur, all right, let me see here. Arthur's asking, what are the numbers on the right side of the chart? This is crude oil right here. Underlying crude oil futures, $31.22. Over here on the left is USO, which is the ETF that tracks crude. Donji, I hope I pronounced that. Could it be an ending diagonal from the May high? Very possible. Yep, absolutely. It really, really could. So if wave 4 is over here, that's 1, that's 2, that's 3. And then if we get the wave 4 up, Donji, ending diagonal, absolutely. Yep. It could be. Even worse, it could be wave 4's over here, and this is 1, this is 2, and then we're just dropping in a straight 3. And if it's not an ending diagonal, then crude oil's going to like $15. So I don't have a strong feeling in crude here, just because this is kind of a goofy, ambiguous pattern in here. So, yep, couple possibilities, but no, you're absolutely right. Okay, that's good. Just checking out numbers. Everyone has that triangle in SPX, NDX. Markets stay frozen just because earnings season buyback blackout. Why would even the big boys buy? Google looks great for wave 5. Okay. A lot there, Brett. Yep. Okay. So yeah, futures continue to be up. So crude oil is doing that. Gold, gold's another one that I think's in an ending diagonal. And let's pop that guy out. I'll just bring over my weekly chart here in gold. I do think there's a pretty spectacular move coming in another ending diagonal, and a diagonal happens in the 5th wave position. So this is gold. We're doing 1, 2, 3, triangle 4, and then I thought the diagonal was over, but it's starting to fall apart. So it looks like we're gonna have another little drop down into the 1,000 level, and then I think we should, pardon me, get the pretty big explosive move out in gold. So we have a trade going on in gold right now, and this is one I've been talking about a lot with my customers here. This what we call the cowabunga trade. So it's a trade that sets up like this. Analyze. So what's the position we have on? Nope. Positions. Gold. Okay. So here's a trade we have on. I have in the Feb monthlies. I'm short 2 of the 105 calls and long 4 of the 110s. So this is what we call the cowabunga trade. So it's like trying to paddle into big surf and catch a huge wave, but you also have a super awesome life preserver. If everything goes to hell, you actually still make money. You get punished if you stay on the beach and you don't do anything. So what I mean by that is, so GLD is trading $103.79 right now. We put the trade on when it was a little bit up here, more like 105 area. And this trade basically, if I'm wrong and gold just keeps dropping in an ending diagonal, I'm going to make, you can see in blue here, at expiration, I'll make $202. If the ending diagonal kicks into gear and gold does explode higher and we get above 114, I have unlimited profits on the upside. So if gold goes to 120, I'll be up $1,200. The problem or the issue comes in if gold stays kind of range bound and just goes to 110, I'll have max loss of 785. So this is the area where you get hurt. I think gold's either going lower back to 1,000 or it's going to squeeze higher. So this is the trade that we're kind of focused on. This was like the GMCR trade that we did that we made like 3,600% on our options. We made a ton of money on that trade. It was a similar setup. Okay, and we actually have a similar setup going on in GoPro as well. So, Yeah, you know, Gerald, good question there. Why'd you only go to Feb? I was playing for a diagonal that was over in the gold market. Okay. And the wave count is this right here. I was playing for the wave count to be over, or for the ending diagonal to be over, like this count. So we only went out to Feb because I'm like, okay, if this is the ending, if this is the ending diagonal, we need to rip higher. And I knew there was a chance that I was wrong and that we were gonna continue lower in the ending diagonal, and we're not done yet. So I'm like, okay, I think I'm wrong in this trade. And you know, as you can tell, we are up money on the trade. We're at 103. So you know, if I just leave this thing, I'm completely wrong. I'm still going to make a little bit of money. As we go out to March and April, as the ending diagonal unfolds based on this count, I'm going to reestablish the same trade, but I'm going to do it down into this zone out into March, April, May. So I'll put a whole nother trade on, if that makes sense. Right? I didn't want to put one trade on to see if the diagonal was over here or if it's going to be down here. Okay, cool. Yep. Justin, do you text members as soon as you adjust their sell positions? Every single time. Yep. We keep track of, I'm very diligent. I'm not one of these guys who just kind of shoots out a bunch of text messages and trade alerts and just says good luck and doesn't follow up. I keep track of all of my trades, penny by penny. Yep. And we send out a text message every time that we make a move. So yeah, I mean, you can expect to get 1-2 text messages a day. Sometimes it'll be a little busier. We also offer the daily video. So, you know, this is the video from last night, all the positions we talk about. I give you the time that I talk about each one. So we do that, and you've got the chart room, and it's a pretty full service offering, I would say. So then there's the main charts on all the big markets we're looking at, and the man cave, trading tutorials, all kinds of fun stuff there. And I'll show you guys how to get a trial to this if you like. All right. So that's the gold trade. And good question there, Gerald. Thanks. Tweeting you a gold miner. It will keep us out of trouble, you promise. Okay, cool. Thanks, Brett. I'll take a look. All right, so that's gold. Crude we did. Let's just take a look at the dollar, and then we'll jump into some individual names. Where's my dollar? You know, the dollar, I think, is still range bound. I think we need to do some premium selling strategies here. I think we're still in a larger fourth wave in the dollar. Pretty sloppy in here, not really doing a whole bunch. Could be a triangle. I think we're in this fourth wave. You know, it's not a great triangle. This would be A, that would be B, C, D, and E. Don't have a great feeling. It's, you know, we've really lost the uptrend in the dollar since March 2015. Everyone's talking about this big move up in the dollar. Dollar hasn't moved in like 10 months. You know, we've been pretty flat. The dollar had its move in 2014 and early 15, but 2015 into 16 has been flat, the dollar. So, you know, while we're below $100 in the dollar index, I still think you could put premium selling strategies to work, and just looking for that fourth wave to continue. So that's the macro picture. Where is right there? Positions we're working with our members. We'll go to the trade desk. CSX. So we put an options trade on, or we put an earnings trade on in CSX. Let me just check that one because I know their conference call is going on. So we just put that one out yesterday. CSX. Trade, active trader. Okay, perfect. Oh, no. CSX. It's starting to rally a little bit. That's not good. We have the monitor. What are we short? We are short the... So those would be fine. I have a 24.25 call spread on in CSX. We need to stay below there. CSX is coming on. All right, we gotta. Hopefully that comes off. They are going through a conference call right now. That'll be interesting. Okay, so from there we have Facebook. I put Facebook to work with customers yesterday. That setup is a simple fourth wave. Real kind of simple setup there in Facebook. So we're looking at red 1, red 2, red 3. Red 4 tried to dip into the area wave 2, but ultimately closed back above. So pretty good relative strength there. And we are rallying up now. We're at $100.20 pre-market. So we sold Facebook. I think we did a 95-92 half put spread in Facebook. Implied volatility is up, so we sold 95 puts which are just below wave count validation, and then bought the 92 halves down there. So if this wave count's correct, we should not move below $95.84. So fine being short those puts down there, that put spread there with an up market. GoPro, we adjusted that one into the Cowabunga trade. We did an SPY put spread. We sold SPY. I also have SPX put spreads, just based on this support zone that I talked about earlier on in the webinar. So that's pretty straightforward. I have a McDonald's butterfly going on right now, super high implied volatility. So kind of just going sideways, and that's really what we hope. We have the gold. That's the Cowabunga trade. We also have Amazon working right now. We're long Amazon. I don't know why that's coming up. Error execute and command get market data null. Let me just reload that. Okay, kind of a similar setup to Facebook. It's just simply 1, 2, 3, and this a nice expanded diagonal in 4, and we've held the fib support zone. Where are we trading Amazon pre-market? Products. Okay, we're at 619, 620. All right, that's fine. 619, 620. So we're up a little bit from yesterday. That's fine. So kind of holding that support zone down there. So, I'm giving this support in the S&P the benefit of the doubt. We're long Amazon, long Facebook, long the S&P via some put spreads. We have the butterflies going on at McDonald's. So that's kind of the rundown right now. Let me just take some questions. Donji, could the contracting triangle end with the low on the dollar? How about the contracting triangle ending with a no low in the dollar? Let me take a look at that one. Yes, this is being recorded, Diane. Yep. Oh, I see what you're saying. Yep, very, very possible, and I'll show you guys what that. And I think I have that count. So what? And I'm sorry if I'm not pronouncing that right. Donji, I hope that's right. Donji, if that's right, that's a cool name. So what he's saying is, did the triangle end in the dollar in November? And I'm assuming it's this count you're talking about. And if that's the case, just simply looks like that. And if that's the case, that would be 1, this is 2, and we're going to break higher in 3. If that's the case, we need to get a move on and start getting higher. Minimum should be the 100% at 104.13. So distance traveled in 1 is equal distance right here at 104.13. So we would really start to need to move higher. So that's possible, but we got to break out in the third wave. Let's see. Lisa, if you like to day trade crude, how does it transfer to a 5-minute chart for MotiveWave or 30 or 60? Sure. Again, crude is, I day trade stuff all the time, but I like to have confidence in the higher wave count to know where we are. If you're really actively trading crude on the intraday, yeah. Let me just take a look at this one. let me pop this out. The way I would intraday trade this, and let me just let price come up here. Let's go down to a 1 hour. I'm looking for 2 good size corrections to call it a complete 5 wave. What I mean is I need a good size correction here and I need another correction here. I don't see any sizable corrections. So what I mean by that is, okay, let me just pull this down and get rid of USO. So this is how I count trend waves in the Elliott Wave world. So it decomposes an impulse, and MotiveWave's given it to me. I like this. We got a decent sized correction here. We're starting to break lower, and it seems to be we're coming back. Okay, you always got to make sure that your third wave is 5 smaller waves. That is a big checkpoint. And just using the impulse tool on MotiveWave, we do have a good 5 wave move. So if I were day trading crude today, I would look for resistance based on this count against the area of the prior fourth, which is right there. Let's do a 4v2 comparison. So distance traveled in wave 2, which is that black circle 2, compared to 4, because they are of the same degree. So I don't think we should get above the 1.618, which is at 32.09. If we do, and it goes up here, that invalidates the count, and that tells you the low is likely in. Okay, a wave 4, a black 4 should not go into the territory of black 2. So 3280 becomes your wave count validation. So 3280. So if you're day trading, I would look for shorts up into this area. If you get above 3280, stop shorting and look for buying opportunities. And then ultimately, if I'm right, we should move down into those high 20s. Arthur, I signed up for your Fib course in November. When are you going to do it? Arthur, you should have the you should be emailed the access code, all that stuff. So if you haven't got it, it's probably in your spam mail. So please email us info@tradinganalysis, and we'll resend you that information. Please help me access the course I purchased, and then they'll get back to you today. Okay. Dave says, is that always the case? Wave 4 should not enter 2. All right. If you want me to do a quick Elliott Wave tutorial, I will. In a good 5 wave move. Okay. In a good 5 wave move, it's going to look like this. Let's say this is a daily chart. If you drop down to like a 2-hour chart, you'll notice that the trend waves 1, 3, and 5 break down into 5 smaller waves. Like that. Wave 3 breaks down into 5 clean waves, and wave 5 breaks down into 5 clean waves. You can never see overlap between 4 and 2 in a higher degree third wave. If you see a pattern that looks like this in a higher degree first wave, that is allowed. 4 can go into 2 because this is what they call a leading diagonal. This is when a move is just getting started. It can be very choppy. Drops down in 3 waves in 2. Never, you shouldn't see anything but this in a third wave. It's always this. Then you drop down in 4, and you can get a regular little 5 wave move up in 5, or you can get what they call an ending diagonal here. And you can also get overlap between 4 and 2. So the only place you can see overlap, and it's fine, is the first wave of a higher degree and a 5th wave, but you never see it in the third wave, right? So you get wave 4 moving into the territory of wave 2, and that's just called a diagonal, and they can happen in a first wave or a 5th wave, but never a third wave. Yep, no problem. If I just explained it to you that quickly and you understood it, then awesome on you, and I guess good job for me on just explaining that. And that holds everywhere. That holds everywhere. And the gold market that we were talking about, that's the diagonal in the longer term daily. or it's actually the weekly, right? Because we have, so here's a longer term third wave. Notice 2 and 4 are nowhere near each other. But once we start moving into red 5, I'm looking for the overlap. 4 is moving into the territory of wave 2 right there. See, green 4 got into this zone of wave 2, and that's expected. And if we get one more push down sub 1,000, that should complete it, and then we should get the squeeze higher in gold. Yeah, Gerald, I'm doing it already. We already did an options webinar, free options webinar for clients last night, and I'll do much more tutorials. Yep, they're coming. Yep, I'm doing it already. Where do you find the replay? Sure, this will be posted in 2 locations. We always post it on the homepage of Trading Analysis. If you just go to tradinganalysis.com, the free videos right there, I'll have it up here. Just look for the Wednesday webinar, or you could just click right here to free trading videos. And the Wednesday webinar will be archived here. I didn't do one last week, but I did one December 30th, and there it is right there, Wednesday webinar. And I put other free videos and stuff like that. And this is kind of funny. I did a piece on Apple for CNBC, and it was one of the top articles on CNBC over the weekend. And I said Apple could go into the 80s, and people were so pissed off at me. I got like over almost 500 comments. People were really mad when I said Apple could go into the 80s. It was kind of awesome. So you can see other free videos on the blog, and then every time I do CNBC. And by the way, I am on CNBC today and every Wednesday for Trading Nation, so I host the show 1 o'clock on tradingnation.cnbc.com, and then I'll be on live at like 2:30 today on CNBC. Great question there, Eric. Do you use other indicators such as RSI to confirm? Not really. Indicators tell you what you already need, what you already know. They tell you what you already know. I guarantee you there's an indicator divergence right here in gold, because we're moving into an ending diagonal. Price pattern tells me we're losing momentum. I already know there's an indicator divergence here. So, I mean, you can put it up if you want, but what does it really do? Nothing. So I'll throw RSI. I'll bet you $100,000 RSI has made a higher low as gold is making a lower low. Oops, let me just do that again. Add study. Recent RSI, $100,000. And I promise I haven't looked at this RSI. Oh, look at that. RSI is making a higher low. See, gold is making a lower low, and RSI is making a higher low. You know what? You don't need indicators, right? They tell you what you already know. So that's just my opinion. All right, guys, I'm going to leave it there, and we'll catch up with you. I'll let you know about next Wednesday. I'm traveling, so if I have a good setup and a good connection and all that, we'll do it. But I will email you, so please stay tuned. If you guys do want to take a trial, I do have a special setup here for you guys. If you come in off the website and want to take a 30-day trial to Trading Analysis, right here, they'll charge you $47. But if you go to tradinganalysis.com/motivate, MOTIVATE, tradinganalysis.com/motivate, you can get this trial for $7, 30 days. And here's what you get: full access to the members area, including chart room, daily video, trade desk, which includes SMS alerts, members tutorial. You also get the man cave, which is my blog posts. I put some market related stuff, some non-market related stuff, all that. So for $7, 30 days, can cancel at any time, no risk. Go to tradinganalysis.com/motivate. And it will look like this. It'll flip you over to this, and you can sign up for $7. Okay, so that's it. Hope that helps, guys, and have a great rest of the week, and I'll catch up with you guys soon.